Hello there. Welcome to Cost and Management Accounting. And five, we've got a question that we want to look at. Still working on June 2023. This is a question paper from June 2023. And this is our question 6 on that question paper, being the last question that is on that question paper. So we're going to go through this question and answer what is required in terms of the section of required there. Right, we go through the question. The question reads: the following information appears in the books of Moshira Traders, balances on 1 May 2020. So this is the beginning of the period. It were given these balances. So we are going to put these balances in our accounts that are required at the end of the question. But basically, when we have a raw materials balance at the beginning of the period, it means that this amount we are going to see it in the raw materials control. This one will go to the raw materials control as the opening balance. Then our working process, this balance working process, we are going to see it in the production control. So we have a production control as our opening balance, which is 8,200. Then we've got our finished goods. Finished goods also, we are going to see it in the finished goods account. Finished goods control. We are going to see it there. So that's what we have in terms of those opening balances. Then we've got some balances that were given below again. Summary of transactions during April 2015. They are given there. We have balances there. We can see that it's a list going down. We can go down to see what we have in terms of the question. But you would see that at the end of the balances, we have got some balance of finished goods on 3rd April. These are the closing balances that we have. Closing balance of finished goods, and then unfinished goods. This is work in process. We are going to see also as the closing balance, and this one also. So basically, what we are saying is this is the balance of finished goods in the finished goods control again, but it will be the closing balance, and then this one we'll see it in the production control as the closing balance in 9,270. So that's what we have. Then on additional information, we are given manufacturing overheads are allocated 75% of the direct labor costs. Very important to take note. We've got 75%, and we would want to see what is the amount of direct labor costs there that we have in the question, because the instruction is that 75% of direct labor costs. So direct labor costs we have it here 196,000. So we are just going to calculate 0.75% of that, and then that will be the manufacturing overheads. And that figure, obviously, we are going to credit in the manufacturing overheads control, and then we post it to the production control. That is, we debit the amount in the production control, and then credit in the manufacturing overheads. That's the double entry that we have there. And then we go on to see the question is now on draw up. Here we are now here draw up the following ledger accounts in the integrated accounting system. So on 6.1, we have got the raw material control. 6.2, we have got the production control. And then 6.3, we have got the manufacturing overheads control. 6.4, we have got finished goods control. 6.5, labor control. And 6.6, cost of sales. So we have got all these accounts which needs to be opened. So what we are going to do first is we are going to open the raw material control. And then we open others, but basically we can go through the balances that were given, and then we post them to the necessary accounts that they are supposed to be posted. Remember, at the beginning of the question, we've got those opening balances. We can just post them to the accounts necessary, and then we see other balances where we can post them. But basically, in terms of opening of this ledger account, what is very important for you is to take note of the double entry that is going to be applied in terms of those balances that you are given. So what is important is for you to master which account should be debited when we have this type of a balance, and which one is credited. Then we know that double entry is there's a double effect. So we need to know where is debited, and then corresponding entry obviously is going to be a credit, and the reverse is true. So we can go from the beginning of the question and see the balances that we are having there, and then we post them to the necessary accounts, right? You would see that the balances that we have there, let's check at the beginning of the question. Let's check there at the beginning of the question. So now you can see that at the beginning of the question on 1 May 2020, that is at the opening of the period, we have got raw materials 52,700, we have got work in process 8,200, and then finished goods 18,200. So what we are going to do, we are just going to put them as opening balances. in the raw materials control, we are going to put this figure. In the production control, we are going to put this as the opening balance BD. Then we, in the finished goods control, also put this one 18,200 as a balance BD. So we can go to our accounts. Here now, we first we have got this production, sorry, this raw material control and our balance BD. Balance BD, we've seen that the balance BD there is 52,700. Then we check again to the account of production control, where we're going to put the opening balance of that one of the working process, opening inventory of working process. So it's going to come here. We come here now. We have our balance BD. So the balance that we have there is 8,200. Then also we go to the finished goods control account. It's here, and then we start with our balance BD. This is our balance BD, and the figure that we got there was 18,200. So we've got 18,200 here. Right. So having entered our opening balances now, we can go back now to see the next balance that we have and see what we can, how we can post them. We have a summary of transactions during April 2015. Then the first figure that we have is raw material purchased. So double entry on raw material purchased. We are going to the double entry. We are going to debit the raw materials. Remember, we are receiving raw materials, so the raw materials control is going to be debited. We are receiving, but we are paying cash, so bank is credited. So this is double entry. If you are paying with check, we credit bank. If you are paying with cash, we credit cash. Depending on how we are purchasing, we might also purchase on credit, which means we're going to open credit the name of the person we are buying from, or be it the name of the business that we are buying from. So you'll see that beneath that we also have railage on purchases. This is carriage on purchases, and we know that whenever we have some transport costs on purchases in the form of carriages, be it customs duties, it's going to increase the value of the purchases. So we are going to do the same double entry as we did to the first on raw materials purchased. We debit raw materials control, and also we credit bank, because this carriage or railage we are paying in amount. So we've got the double entry that is applied there on those whenever there's an inventory purchased. We see that this is the double entry that we are going to apply. That is, we debit raw material and we credit bank. And also this also applies to what? To the railage part. So what we can do now, we can go to the other section and put those entries. That is, we are going to debit raw materials control with 410 and also with 46,500. So we can go back to our T account. There now we have our T account. We are on raw materials. Let's check the raw materials account, raw material control. Right, this is our raw material control. So this is the one that we are supposed to debit with the bank. So just assume the purchase was through bank. It's 410. And also we paid the railage, which is also bank. The amount was 46,500. 46,500. So that's what we have in terms of that one. Then we go back to the list of balances that we have. So beneath that we have got direct labor. So direct labor we have got 196. 196. So the double entry that we are going to employ there, we are going to debit the production control. We are going to debit the production control. Remember, this is direct labor, and direct labor is going to be a variable cost. So we are going to debit the production control, and then we credit the labor control. So this figure will be coming from labor control, and we are posting it to the production control to calculate the cost of finished goods at the end of the period. Remember, in that manufacturing account, that's how we adjust them so that we arrive at the figure for cost of production. So the double entry in terms of direct labor, double entry in terms of direct labor, we have it here. This is we credit. We are going to let's see. No, this is not the one that we have. So let's check here. We are saying we are going to credit on direct labor, we've got 196,000. We are going to debit the production control, and then we credit the labor control. So we can go to the other section and enter those amounts that we have there. We check now on the where we have the production control. Production control. So production control is here. So basically, what is happening on this direct labor is that we are posting it from the labor control. This is indicating the direct labor for the period. So we are transferring it from the labor control by crediting labor control, and we go on and debit the production control. Remember, at first when this labor was paid, we debited labor control as an expense account. And then now the balance is on the debit side of the labor control. Now we are transferring it from the labor control, credit labor control, then we debit the production control. So here we are saying the figure that we have there, we are saying we are debiting production control. So we are saying labor control. Labor control, we have 196,000. And then the corresponding entry, the double entry, is that we are going to credit the labor control. So we can check where we have the labor control, the figure for labor control. So let's check the account for labor control now. Right, the account for labor control is here. So we are saying we are crediting labor control. So this is labor control with 196. So we are saying production control on the credit side. Production. Production control, and the amount is 196. And also we are seeing that we also have a production control. So we are going to debit also the production control. And we are taking the figure from labor control. So we go there to the production control. Okay, for the production control, we had already debited there with 196,000. So that's what we have there in terms of labor control. That's what we have there in terms of labor control. Right, we go to the next balance that we have there in the question. We also have indirect labor of 44,000. Indirect labor of 44,700. So remember, the labor that is we are going to have direct labor and indirect labor. So these two accounts, the direct labor and the indirect labor, these two elements will be in the labor control. We find them in the labor control. They will be in the labor control, but then they'll be on the debit side of the labor control. The figures they will be on the debit side of the labor control. Then what we have to do is now to transfer them to two different accounts. Direct labor, we are going to post it to the production control, like what we did to the 196,000. Then 44,700 will now go to the manufacturing overheads control, because these two are different. Direct labor, it's a variable cost, so it goes to the production control, and then indirect labor, it's a fixed cost, so it goes to the manufacturing overheads control. So already we have posted 186 from labor control to the production control. Now we are posting indirect labor from the labor control to the manufacturing overheads. So we can have those two accounts being affected there. If you come here, on the production control, we are saying on the Production control, we are not entering that one. We are going to the manufacturing overheads. So manufacturing overheads is here. And remember that 44,700 we are debiting there, but we are taking the figure from labor control. So we are saying labor control, we are having 44,700, figure was 44,700, and then we are now crediting the labor control. So we come here on the labor control, we are saying this is now going to the manufacturing overheads. So these figures are on the debit side. We are going to put those balances on the debit manufacturing overheads. And the figure is 44,700. Right. So that's what we have in terms of those accounts. So we can go back again to see what we have after that one. So after the 44,700, we've got factory rent. We've got factory rent. So remember, the factory rent is also a manufacturing overhead. So when you pay this amount, we are debiting manufacturing overheads, and then we are taking it from the rent account. But the rent account is not being asked in this question, so we are not going to be affected by the rent account. We are only affected by manufacturing overheads. So all other rent account, insurance, depreciation on factory, and then maintenance of factory equipment. Here, these are all manufacturing overheads. So if you come here, we can say from here, where we have factory rent, and then up to the factory rent, up to the maintenance of factory equipment here. These are manufacturing overheads. So what we are going to do with these amounts is that we are going to debit them in the manufacturing overheads control. We are going to debit them in the manufacturing overheads control. These are all fixed costs, and they are put in the manufacturing overheads control. So we are going just to put factory rent as 22,800, factory insurance as 14,500. Then we also have depreciation on factory machinery at 12,900. Then we've got maintenance of factory equipment 5,000. So we can just go and list them on the debit side of the manufacturing overheads. So if you come here, we see now manufacturing overheads is here. So we can list them starting from, we have got rent there. We have 22,800 according to the figures that we have there. And then we also had depreciation. We also had depreciation. The depreciation amount was 12,900. And then we go to insurance. Insurance is 14,500. And then we've got maintenance. All those figures there, we define them as manufacturing overheads. Then we have 5,000. Then we can also check for other manufacturing overheads that we can put on the debit side of the manufacturing overheads control. If you check here, you'd see that the figure for indirect material also falls under manufacturing overheads, which is 23,500. So we just omitted this one, indirect material. We are going to put it again as 23,500. So we come here, and we are saying we also have indirect material. And this figure for indirect material, we are taking it from material control, or we are just say material control, which is 23,500. And we do have the material control. This account do have it's in the question. if you look at the first account that we opened, we need to go and credit it here. You have debited here, so you're crediting the material control now. So you check that, you see that we have that account here. Let's check it up there, which is the raw materials control. So this is the account that we have that we are going to credit with that 23,500. Then we are going to see that we have this figure is going to the manufacturing overheads. We are manufacturing manufacturing overheads. So you see that of the material that is here, part of it is going to the manufacturing overhead as a fixed cost, and then the other one is going to be a variable, and we are going to post it in the production control. So the variable part, you're going to see it in the list of balances. So the manufacturing overhead that we have there is 23,500. So this is the fixed part of the material. And then let's check the variable now that is going to the production control. You would see that that figure is given here in the question. That figure is given here in the question. So you check here, we've got raw materials issued. 172,600 represents the direct material that is posted to the production control. So we are going to put, so we are going to debit the production control with 172,600, and then we credit the raw material control. So we can go back to our account again. There we are saying we are now crediting the raw material control, we are crediting it, and we are posting the figure to production control. Right, production control, the figure is 172,600. So remember, if the double entry is affecting another account that is being asked in the question, we go again to that account and enter. Like here, we've got production control. So this production control, we have it. So we can go again and debit it there. So production control, this figure is being taken from material control. Material. And material control is we're saying it's 172,600. So that's what we have there in terms of that figure. And then we also check of other accounts, so other balance that we have there. So we have transferred this. We have transferred 44,700. The rent we have transferred it. The factory insurance or the manufacturing overheads we have transferred them. Then let's check if we already adjusted this 44,700 of indirect labor. 44,700 indirect labor, sorry. Right, 44,700 we adjusted it here. So we can check on the next one. We also have let's check in the questions that we have. Right, so we can go to our account of labor. Remember, we transferred something from the labor control, but the amount that we transferred should be also on the debit. We transferred this amount production control, we should see this amount also on the debit, because we are taking them from the debit side. Initially, this labor cost was debited in the labor control, and then we had to take it from labor control to post it to the production control so that we calculate the cost of production for the period. So what we are going to do, we are going to put again these figures on the debit. So here, we have production control. We are going to say production control. We have 196,000, and then we have got manufacturing overheads. Also, we should see it here. Manufacturing overheads, and we have got 44. Production control. sorry, we cannot use this here. This the detail part is wrong. We should because when initially when we debited in the labor control, we are paying these amounts. So it means we were paying using bank. So we are saying bank. We debited labor control when we paid the cost, and then we credited bank as we are paying money. So that's the issue. Then here we've got 44,700. So later on, we then transfer the figures to the other figure to the production control, the other figure to the manufacturing overheads, depending on the nature of the labor. So this one to the production control represents a direct labor, and this one to the manufacturing overheads is representing indirect labor. So that's what we have there. Then now we check of other transactions that we have in the question. So it means here we've exhausted the entries that are supposed to be put there. So what we are supposed to do now, we go to the first account, which is the raw material control, and we balance the account. Remember, we are not given the closing balance for raw material control. We are only given for work in process and also for finished goods. So we need to find this balance here by balancing this account. So we can put our double lines. This is our double lines. Then you add to balance the account. Remember, you add the total of the debit, add the total of the credit. Then the bigger side will come in between the double lines. Then our balance CD is going to come on the side that we've got a smaller total. And then our BD, the opposite side below the double lines. So what you're going to do, if you add the debit side and the credit side, you see that the debit side is greater, and here's a total of 509,200. And this figure is going to come both sides. And if you subtract this figure minus 172,600 and 23,500, that's when you're going to get your balance CD. And that balance CD is going to be 313,100. And obviously, it's going to come here again as our balance BD. That is 318,100. So that's what we have in terms of that one. Then we can move on to the next account to see what we can do. We are now in the production control. Right, in the production control, we have the figure for work in process. The closing balance of, remember we are given the opening balance 8,200, we've entered that. And also we check in the question now if you have got the closing balance now of work in process. We are seeing that we have it here, balance of unfinished goods is the closing balance of the work in process, and we are given it as 9,270. So it's going to come to the credit side. Remember, when we have unfinished products at the end of the period, it means the BD will be on the debit, but the CD will sit on the credit. So what we are going to do there, we are just going to put the balance CD. Let's put it here because we've got some entries that we want to put there. Balance CD, and we are given the figure there is 9,270. Right. So that's what we have there. And then there's a figure which is supposed to which we are supposed to put here in the production control, which we are going to transfer from manufacturing overheads. Remember, manufacturing overheads is listing all the fixed costs that we have in the business. But at the end of the day, the cost of production of finished goods is going to be calculated in the production control. So we need to put all the costs in the production control so that we arrive at the final figure for cost of production. So what we are going to do is we are going to credit the manufacturing overheads with the amount of overheads that we want to include in the calculation of cost of production. So the instruction in terms of calculation of that figure, we are given in the question. Let's come here. Let's come here and see. We have this instruction which is saying manufacturing overheads are allocated at 75% of the direct labor cost. So this is the amount that we are going to credit in the manufacturing overheads control, and then we debit in the production control. So to calculate it now, we are saying 0.75 is 75%. Then we multiply the figure for direct labor cost. So if you check the figure for direct labor cost in the question, We come here, the figure for direct labor cost is here, which is 196,000. So what we are going to do is we are going to calculate, we multiply it by 196,000 here, we multiply it by 196,000. So times 196,000. So when you calculate that one, you're going to get 147,000. So this is the amount that we are going to transfer from the manufacturing overheads and put it in the production control. Why are we doing that? We are doing that because we want to calculate the cost of what of our finished goods. So we are going to see that we are going to have a balance that we are going to transfer from the production control to the finished goods control. So this 147,700, we go to our T accounts. This is the amount that is supposed to come here now is being transferred from manufacturing overheads. So you have manufacturing. Sorry, here it's manufacturing. Manufacturing overheads. And then the amount that we have for manufacturing overheads, we are taking it from the manufacturing overheads control. And we have 147 that we've calculated there, 147,000. So with that now, it means we are left with the amount that is supposed to be transferred to the finished goods control. The cost of production now. So what we do now is we are supposed to take it from the production control from the debit side. That's where we have all the costs that are being listed. Remember, we put labor control, material, and then now we've got manufacturing overheads. This is the same thing that we do in the manufacturing account, that we add the direct material, add the direct labor, then we also add manufacturing overheads there to get the figure for cost, for total production cost that is going to be transferred to the trading account. So in this case, we are transferring it to the finished goods. So we are going to credit here that figure that we are going to transfer, representing the cost of production. We've finished finished goods here. So this figure, we're going to find it as a balancing figure. Remember, the balance sheet we already have BT is there, and then we've got entered our entries, so we can find this figure as a balancing figure here. So if you add, you are going to see that there, as we see the figures, the debit side obviously is going to be the greater side. So if you add the debit side there, you are going to get 523,800. And obviously, this figure is going to come on the debit side again. So if you say now this figure minus this 9,270, you are going to get 514 here, 514,530. So this is the figure that we are going to put in the finished goods account. So we are going to transfer it there. But before you do that, we have got our balance BT that is supposed to come there. Here. This is our balance BT. We are taking it to credit 9,270. So that's what we have in terms of the production control. We can also go down to check the next account. Now we have got the manufacturing overheads, and we have got that 147 that we calculated there that's supposed to come here. So here we posted it to the production control. Production control, and it's 147. So in this account, we are not going to have any balance sheet. Remember, this is a cost account. At the end of the period, all the costs should be transferred to the necessary account that is we are going to charge the amount. So what I'm saying is manufacturing overheads comes as a cost account. So we are not going to have a balance BT or a CT. The balance that we are going to get there, we are supposed to transfer it to the cost of sales. So we can put our double lines. The balance is not going to be balance BT or CT. So that's what we have there. So if you see here, if you add the debit, obviously it's going to be greater. So it's going to be it's going to be smaller here, 147,000. If you add this one plus this one plus this one plus this one plus this one, let's try to do that. And then you see that 147 is going to be the greater side. So 147,000 will come here. Come in between the lines, no balance CT, no balance BT. Then this amount you subtract it from 23,500. You say 147,000 minus 23,500 minus 5,000 minus 14,500 minus 4,900 minus 22,800 minus 44,700. you are supposed to get 23,600. And this figure, we are transferring it cost of sales. And we also have a cost of sales account, so we can just go there and put that 23,600 on the credit side now. Now we go to the credit side of we have the cost of sales here, it's still blank, but still we can start by posting that amount of which is coming from the this amount is coming from the manufacturing overheads control. So here we can say manufacturing. Remember, we debited it in the manufacturing overheads control. Now we are crediting it. That's the corresponding entry. It's 23,600. Right. Then we go on to the next account. The next account that we have now is the finished goods account. The finished goods account. So in the finished goods account, we only have a PD that is there. We only have a PD that is there. But we also have a figure that we are supposed to transfer from the production control. I think we've already calculated that figure. We can go back there to check in the production control. This is the production control. We've got this figure. If you come here, we have got this figure of 540,530 that we said we are transferring finished goods. So we are going to debit again at the finished goods account with 514,530. So we can go there. So this figure is coming from the production control. Production control, and it's 514,530. Right. So that's what we have there. And then remember, this is a finished goods control. The balance BD we were given in the list of balance 18,200, and also the balance CD at the end is given there. If you go to the question, it's given at the end of the question here. This is the balance of finished goods 320,500. So this is going to be our balance CD. So you can go back there and put that one. Right, we have got a balance CD here. And our balance CD is 320,500. But any balance that is, since we have the opening balance and closing balance, and we've entered our entry, which is our production control, which means any balance that is going to come in the account is going to be transferred to the cost of sales. It's going to be transferred to the cost of sales. Irregardless of the side where the balance is, we just input cost of sales. So if you see here, we can now put our double lines. We are going to see that the debit is greater than the credit. So if you add the debit there, the total is going to be 532,730. And it's going to come in between the lines. Right, so here we are going to have a balance here, which we are going to transfer to cost of sales. So if we say 532,730 minus 320,500, you get the figure that you get there is 212,230. So that's what we have in terms of this finished goods account. So what we can do now, we can proceed to the next account that we have, that is below the finished goods. We have got labor control now. Labor control. So labor control also is a cost account, just like the manufacturing overheads. Remember what we said in the manufacturing overheads. We said we are not going to have a balance BD or CD. We are just going to transfer the figure that we transfer to the cost of sales. So if you look in this labor control, we do not have any balance that is there. If we add the debit, it's going to be the same total that we have on the credit. So no need to calculate the balance again. Plus, there's no balance that we should have there. But we add now the 196,000 here to 44,700. We are supposed to get 240,700. So that's what we have on labor control. Then we go to the last one. I think that is the cost of sales. Remember, we have a figure there that we were supposed to transfer here for cost of sales. This one from finished goods, we've got this figure that we have 212,230 supposed to come to the debit side of cost of sales. We credit it in the finished goods control. So this is the finished goods control. Remember, this one is the finished goods control. And then we are now going to debit it in the cost of sales. We are now going to debit it in the cost of sales. So we can go down. Here now we are saying cost of sales. This one is now is coming from finished goods. So we can just say finished goods. And the amount is 212,230. Right. So that's what we have there. So these are the entries that we have. So any balance that we are going to see in the cost of sales is supposed to be transferred again to the trading account. So that's what we have now. So basically here you see that the debit is greater there. We have got only two figures that are there. 212,230, and on the credit we have 23,600. We are seeing that. So we just put the figure that we have there, which is the bigger side is here. So it's 212, 230. The same figure is going to come here, 212, 230. And then the balance obviously is on the credit is going to the trading account. So remember, this one is not a balance sheet. Then we say 212,230, then we subtract 23,600 to get the balancing of you're supposed to go to trading account, which is 188,630. Right. So that's what we have there in terms of this question 6 on June 2023 exam. So having that now, we have got this this is just a summary of the double entry that we have applied there when we are preparing our accounts. Remember when we for the inventory purchase, we debited raw material control with the inventory purchase, and the corresponding entry was supposed to be credit bank, but we were not asked about bank account. So we left it like that, and then ended on the raw material control only. Then for materials issued to production, that is direct materials, we credited production control with that figure, and we also debited the raw material control. So that's what we are having there with raw material issued to production in the form of being direct. And then the indirect one is the one that we debited in the manufacturing overheads. Remember that we were saying this is the indirect material, and then we credited raw material control with that amount, which was 20,500 if I am not mistaken. Then we go again when the manufacturing overheads were transferred to the production control. That's what the 0.75% that we calculated. That one we debited production control, and then we created manufacturing overheads control. So basically that's the double entry that we applied. Then the balance of manufacturing overheads, we transferred it to the cost of sales, whereby we debited the balance of the manufacturing overheads control, and then we created the cost of sales. And then cost of finished goods, we debited the finished goods account, and then we created the production control that was 514,530. So this was the double entry, and also we've got some entries that we did at last of transferring the cost of sales from the finished goods by crediting finished goods control, and then we debited cost of sales. And obviously, lastly, we had to transfer the balance of the cost of sales account to the trading account by crediting cost of sales. And obviously, the trading account now is now going to be debited. So basically, what is important is to capture or understand the double entry that you applied there. That will make your life easier in terms of answering this type of a question. So that is what we have, guys, in this question 6 of June 2023. Stay tuned for more videos. Those who haven't subscribed, please subscribe and share. I will meet again in the next video. With that, I'm signing out.